stop scrolling right now, because what I'm about to tell you could completely change how you see your Social Security check in 2026. You might think your benefits are going up next year, and yes, technically they are. But here's the harsh truth that nobody's talking about. The extra money you're getting might disappear before you even feel it in your pocket. I know that sounds frustrating, maybe even unfair, but stay with me because understanding what's really happening could save you from serious financial stress in the coming months. This isn't just about numbers on paper. This is about your life, your bills, your dignity, and your future. So don't click away, because by the end of this video, you'll know exactly what's coming and how to protect yourself. Hey, welcome back to the channel. I'm so glad you're here because today we're diving deep into the Social Security changes for 2026. And trust me, this affects millions of people just like you. If you're retired, about to retire, or you're helping a parent or loved one navigate this system, then this video is absolutely critical. And listen, if you find this information helpful, please hit that subscribe button and turn on notifications. I create content like this to help real people with real problems, and your support means everything. It helps me keep bringing you honest, clear information that cuts through all the noise out there. Now, before we dive in, I want to hear from you. Drop a comment right now and tell me, what worries you most about Social Security? Is it the rising costs, healthcare expenses, the confusing rules? Or maybe you're just frustrated because everything feels so complicated? Your voice matters, and I read every single comment because your stories help others who are going through the same struggles. All right, let's get into it. The big news for 2026 is the cost of living adjustment, or COLA. Social Security benefits are increasing by 2.8%. That applies to everyone, whether you're collecting retirement, disability, or SSI. On the surface, that sounds pretty good, right? It's higher than last year, and it's close to the historical average. For the average retiree, this means your monthly check goes from about $1,915 to roughly $1,971. That's an extra $56 a month. Now, let me be clear, $56 is real money. That could pay for groceries, medications, gas, or part of your electric bill. I would never dismiss that. But here's where things get complicated, and this is where so many people start feeling cheated. That 2.8% increase is based on something called the CPIW, which measures inflation for workers, not retirees. And here's the problem. Retirees don't spend money the same way workers do. You're spending more on healthcare, prescription drugs, housing, and utilities. And guess what? Those costs have been rising way faster than the general inflation rate. So even though your check is going up, it doesn't keep pace with what you're actually paying for. I've seen so many comments from people saying, it feels like I got a raise on paper, but in real life, I'm falling behind. And honestly, I completely understand why you feel that way. It's not in your head, it's real. And now we have to talk about Medicare because this is where things get even more painful. For 2026, the Medicare Part B premium is jumping significantly. It's going from $185 a month to $202.90. That's almost an $18 increase every single month. Plus, the annual deductible is rising to $283. So let's do the math together. Your Social Security check goes up by $56. Your Medicare premium goes up by $18. Suddenly, that raise shrinks to just $38. And we haven't even talked about rent, food, car insurance, property taxes, or anything else. For higher income retirees, it's even worse because of something called IRMAA, the income-related monthly adjustment amount. Some people will be paying $400, $500, even close to $700 a month for Part B. And yes, that comes straight out of your Social Security check automatically. Now here's something really important that causes a lot of confusion online. There's something called the hold harmless rule. This rule protects most people by ensuring that a Medicare premium increase cannot cause your net Social Security check to actually go down from the previous year. If your premium increase is bigger than your COLA, Medicare adjusts things so your check doesn't shrink. And here's the key part. You don't need to call Social Security to activate this protection. It happens automatically. I know there are posts and videos out there telling you to call immediately or you'll lose money, but that's simply not true. And honestly, those panic posts are clogging up the phone lines and making it harder for people who genuinely need help, like someone who just lost a spouse or is trying to file for disability. So please, if you see those urgent messages, Take a breath and verify the information before you act. Now, let's talk about something that could actually help some of you. There's a new federal tax deduction for 2026 that applies if you're 65 or older. It's an extra deduction of up to $6,000 for individuals and up to $12,000 for couples. This starts to phase out if your income is above $75,000 for singles or $150,000 for couples. Let me be crystal clear about this. This does not make your Social Security benefits tax-free, but for middle-income retirees, it can significantly reduce your overall tax burden. Some experts estimate that people in the $80,000 to $130,000 income range could save around $1,000 a year in taxes. If you're a lower-income senior, this might not help much because you probably weren't paying much tax anyway, but it's definitely something to be aware of, especially since this deduction expires in 2028 unless Congress decides to extend it. If you're still working while collecting Social Security, there's another change you need to know about. The earnings limit is going up to $24,480 in 2026. That's about $1,000 higher than last year. If you're under your full retirement age and you earn more than this limit, Social Security will withhold $1 in benefits for every $2 you earn over the limit. Here's the part that people constantly ask me about. If Social Security withholds your benefits because you earned too much, is that money gone forever? No. Once you reach your full retirement age, your monthly benefit gets recalculated to give you credit for those withheld months. It's a long-term adjustment. I know it doesn't help if you need the money right now, but it's not a permanent loss. That's important to understand. For people on disability, there are changes too. The substantial gainful activity limit is increasing to $1,690 per month. If you're earning above that amount, Social Security generally considers you able to work, which can make you ineligible for disability benefits. This number is absolutely critical for people who are trying to work a little bit without losing everything. There are work incentives like trial work periods that let you test working without immediately losing benefits, but the rules are incredibly complicated and poorly explained. SSI recipients will see a small increase as well. The maximum federal SSI payment for individuals goes up to $994 a month. That's still extremely low. And here's something that will shock you. The resource limits of $2,000 for individuals and $3,000 for couples haven't changed since the late 1980s. Think about that. Those limits are nearly 40 years old, and because SSI is often tied to Medicaid, even a tiny increase in income can cause someone to lose their healthcare coverage. I've heard heartbreaking stories where someone loses Medicaid because their income went up by $5. $5. And suddenly they're responsible for Medicare premiums they absolutely cannot afford. Another area that causes massive confusion is survivor benefits. I see comments all the time from widows and widowers who were never told they could claim benefits earlier. Survivor benefits can start as early as age 60 or even age 50 if you're disabled. If you wait too long, you don't get retroactive payments for all those missed months. Sometimes people only receive the $255 death benefit and assume that's all there is. It's not. There could be substantial monthly benefits available, but you have to know to ask for them. And then we have the problem of misinformation. This has become absolutely huge. Fake videos and urgent warnings that sound official but aren't. They tell people they need to update their accounts immediately or they'll lose benefits. That's almost never how Social Security actually works. If there's a real issue, you'll get an official letter in the mail, not a viral video online. The Social Security system itself is under pressure. The trust fund is projected to face shortfalls in the next decade if Congress doesn't act. There are debates about raising taxes, lifting the income cap on contributions, adjusting benefits. None of that is happening in 2026, but it's part of the background anxiety people feel. Yet here's something important. Social Security has never missed a single payment. Not through wars, recessions, pandemics, or political chaos. It's not a perfect system, but it's proven to be resilient. So what does all of this mean for you practically? It means your check is probably going up a little bit, your healthcare costs are probably going up too, and maybe even faster. If you're working, you can earn a bit more without penalty. If you're planning ahead, there might be tax strategies worth exploring. And if you're confused or worried, please know you're not alone. Millions of people are in the exact same boat. Here's my advice. Stay informed, but stay calm. Don't panic, ask questions, read your official notices carefully, be extremely skeptical of urgent claims you see online, and please share your experiences in the comments because that's how we all learn from each other. Your story might be exactly what someone else needs to hear today. If this video helped you understand what's coming in 2026, please hit that subscribe button and share this with someone who needs it. Leave me a comment and tell me what part of Social Security feels most confusing or stressful for you right now. I genuinely read every comment, and your feedback helps me create content that actually helps people. We're all in this together, and I'm here to keep bringing you honest, clear information you can actually use. Thank you so much for watching, and I'll see you in the next video. Any